Most Asian markets are in the green right now, although there has been a slight slip in the Hang Seng in the past couple of minutes.
Today, you want to see the first hour high and low because today's Thursday, weekly options expiry day. There's still shorts in the system. Can we have a trend day?
We have broken below 90 and that's how we've seen a closing come in as well. But it has to do with the strength in US dollar, the weak economic data that we continue to see from China.
125 points higher on the Nifty.
Theme, I would say, is if inflation were to stay entrenched for a while, investors need to be looking at businesses which have extremely high pricing power.
So as we speak, we're up close to about, 3/4 of a percentage point. The Ganwal family has begun selling their stake in Indigo. This is 7 months after stepping down from the Indigo Aviation board. Earliest we could expect an announcement is perhaps with its Q3 numbers. That's the 12th of October, because typically Infosys announces its buybacks along with numbers.
कोई CONCOR से specific treatment नहीं.
Insurance regulator has decided to withdraw this particular proposal.
17,743, again a 120 points. It's
Good afternoon and welcome to Closing Bell. I'm Anuj. With me is Nigel. Today is just a kind of a day, in fact, between yesterday and today, which tells you how much advantage it is to just stay in the trend and not to worry about minor gyrations here or there. And yesterday, for example, the market recovered 200 points from days low and added another 145 points. But really, the key today has been the Bank Nifty. We highlighted this in the morning as well, that yesterday the Bank Nifty sort of underperformed a bit and took, started the day at 5-day exponential moving average. Could be its day, and it looks like, once 40,000 was taken out, where you had the highest call open interest build up, there was quite a bit of short covering. And I tell you what, days like today, it won't surprise me if you have an exertion towards even 40,500. That's where you have the next set of call build up. Markets and momentum can do crazy things. There's shorts in the system, and that's the beauty of shorts. If they don't get follow through, they themselves lead the market higher. What you have here is a massive short covering in the Bank Nifty, because people have been stuck on the wrong side, especially after what happened yesterday, when it looked like maybe there was another round of correction which is happening. None of that. The market extremely strong.
Well, Anuj, just a quick point. The mid-cap index has been doing better in the last few days. Today, a relative underperformer, though you have still way more stocks that are advancing the declines. Close to around 1,800 stocks are advancing in comparison to around 1,000 stocks that are declining. But the Nifty is up close to around 0.8%. The mid-cap index is up close to around 0.2%. And as Anuj mentioned, the Nifty bank, that's the one that's piling on the gains. Moving higher, 40,200 on the index. Let's see whether or not we can get closer to around the 40,500 odd mark. All that and more in the next 60 minutes. First up, running you through what we have lined up on the show. The cabinet has cleared the reduction of rail license fee. Excerpts from the conversation that we had with the rail minister's press conference on the more clarity that's coming in on this particular issue. CONCOR shares, they surge on the back of bullish brokerage reports suggesting the move will smoothen the privatization process. We'll get you details on that in just a bit. An IT bellwether, Infosys, is in focus. The buyback cool-off period ends today. Does that mean another buyback announcement is on its way? Well, we'll get you details in just a bit. And finally, Trideep Bhattacharya of Edelweiss AMC will be joining in to take the discussion forward on markets and the road ahead.
But as always, we start the show with last hour calls. As we speak, the Bank Nifty is just about to cross 40,200. That really would be perhaps the area to focus on the 3 p.m. move. Mitesh Thakkar is with us for closing strategies. Mitesh, hi, good afternoon. Very sharp move in the Bank Nifty, up almost 2%. Your views here and your stock calls.
Actually, between the two indices, I'm focusing more on the Bank Nifty. Let me just put a comparative outperformance picture. Nifty on the 19th of August made a high of 17,970, and right now is at 17,766. The Bank Nifty made a high of 39,650 at the closing and 39,700 as the highs, and now is at 40,100. So the Bank Nifty is already 400 points higher than the peak made in the third week of August. So very clearly there's outperformance here, and it's on the verge of breaking into fresh highs. So very strong chart pattern over here. So I'll be more bullish in the Bank Nifty. As I said, I think, currently buy a little bit with a stop below 39,900. But once it crosses this 40,300, 350 mark, then I think you can look for about a minimum 1,000 point kind of rally, though I suspect it could be slightly more than that. I, in fact, have two banking names on the buy list. Axis Bank is a stock which is breaking out from consolidation. So that's a buy. Keep a stop just below levels of 762 here and look for a target of 800 to begin with. Similarly, State Bank of India and PSU banks are slightly outperforming the private sector banks. So SBI is also on the verge of getting into fresh high. That's a buy with a stop just below levels of 535, which is just below today's low. And look for 570 as the near-term target.
Okay, all right. Thanks a lot for that, Mitesh. By the way, banking names are moving up and they're moving up in style. The bank Nifty itself is moving up, but not just the smaller banks. You also pull off some of the broader market banks. Indian Bank, something's going on out there. The stock is moving high on very, very large volumes. It's up close to around 7.5%. And that's the big outperformer actually from the broader markets in terms of the banking names. Devin Chauksy of KR Chauksy joins us to give us his views on a few stocks. Hi, Devin. Good afternoon. Thanks so much for joining in. What are you making of this banking move? It's unstoppable. Maybe in a rising interest environment, banks, the NIMs in the near term will improve. Credit offtake, as we have got, the last few details have been looking up. How do you approach the space? The tier 2 banks, or do you believe stick to the larger names, the ICICI banks of the world, the SBIs, Axis Bank, HDFC Bank?
Yeah, good afternoon, Nigel. Well, I think the choice clearly remains with the larger bank for a couple of reasons. One important being that the larger the bank, I think better the ability to lend. And given the situation in which we are as a country, some of the larger projects are getting rolled out. Along with, I think, higher amount of working capital requirement, project finance is going to be the main requirement. And the credit offtake, I think, from the corporate sector, which was up till now remaining benign, I think has now started picking up. I wouldn't be surprised that some of the larger banks would end up reporting, I think, about 20% kind of a credit growth. And selectively, in some cases, I think that would be a distinct possibility. Should that happen, then I think larger the size, better the benefit, I think that one would get as far as I think the bank business is concerned. At the same time, I think the banks with a stronger CASA ratio would possibly, I think, be the biggest beneficiary, because I think their cost of funds would remain on a lower side and their ability to lend, I think, would be, I think, significantly on a higher side. So the preference clearly remains with the larger banks. The reason for which I think the banks are now moving up, I think, is not very surprising, because I think in last few months we have been talking about it, that come second half of the financial year, and when the project starts rolling out, I think particularly from the infrastructure side, it should also demand, I think, higher amount of industry's participation. I think in such situation, I think the bank business also start picking up, and that's what exactly is being seen. Some of the larger corporate banks, I think we like more also because of the fact that they have got a balanced portfolio. On one side, I think you have the corporate lending book, other side, I think the retail lending book. And at the same time, I think the priority sector lending book also is there. I think particularly HDFC Bank combined, I think would have, I think, equal size, I think, on all these three fronts. So that is where we believe that I think such kind of banks would be, I think, relatively more preferred, I think, from investment perspective.
Okay, fair point. 800 and higher and counting on the bank Nifty now, it just looks like one of those moves which is going to, just throw every remaining short out of the system and close at the highest point. Devin, hi, good afternoon. The big catch-up trade has happened in Shree Cement over the last 2 days. I mean, I remember making this point when the index inclusion happened that maybe the worst is over for Shree Cement. That's what normally happens, right? When you throw a stock out of the index, it normally bottoms out because it had already underperformed. But what have you made of this 2-day move of over 10% in Shree Cement?
Yes, Anuj, good afternoon. And well, I think you are right, spot on. I think once I think the stock is out of the index, I think it is better, because I think at least the passive funds who are actively trading on this particular counter, I think would be out. And at least genuine investors, I think, would get into this kind of stuff. So that is one important point, I think, from the market technicals perspective. But having said that part of it, the other side of the story, I think, appearing to be more stronger. On just now, I think on other contexts, I think I was talking about infrastructure projects being rolled out. The current financial year, the second half particularly, is promising to have higher amount of cement consumption, largely because of the increase in infrastructure activity, construction activity into the country, including the road projects. And going forward, I think before 2024 election, my take is that government would make maximum effort in, I think, putting higher amount of trust in rolling out, I think, infrastructure projects, which would probably put cement into a greater demand situation. Till the earlier quarter, I think the situation was, I think, higher amount of input cost. Now, probably, I think the coal price is also, I think, remaining under control. The cost of it, I think, has started coming down for cement companies. And on the other side, I think the prices of the cement, I think, increasing because of the higher demand coming up. So from all perspectives, if you look at it, stronger demand scenario, comparatively, I think, better managed cost structure, and as a result of which, I think, better profitability for the companies. Along with that, I think many of the cement companies, one must know that I think have underperformed the market in last 4 quarters or so. And that is where possibly I think the market would be ready to accept them for all the positive news that we talked about.
And maybe, in fact, they're finally on the prowl. Shree Cement has always been talking only about organic growth. But when you have assets out there now that are what, $80, $70, $60 per ton, and they are setting up capacity in states like Andhra Pradesh for more than $100 per ton, maybe inorganic growth could be another thing that is spurring the company higher as well, showing some aggression as well. Do your organic route, some inorganic growth as well, going into newer markets and building the brand and making it far stronger. So let's see whether or not it can get back its glorious days. Remember, the high price on the stock is more than 30,000 rupees. So it's seen a sharp correction. Now the news with regard to exclusion is behind it. Let's see whether or not better times are there for the taking. But the other stock that's in focus is CONCOR, and we'll get to that in just a bit. Remember, earlier today, Union Cabinet, they had cut the railway land license fee to 1.5% from around 6%. The lease period has been increased to 35 years. Railway Minister Ashwini Vaishnav says that increasing the licensing period will attract more investments. Adds that all companies will have to enter via competitive bidding process to avail this new license fee. Let's hear him out.
5 साल को अगर हम ठीक कर दें, we give it a certain 35 years का period, right? 35 years का एक period दे दें और एक clearly defined formula बना दें, तो बहुत सारे लोग रेलवे के साथ जुड़ के अपने मल्टीमोडल कार्गो टर्मिनल्स बनाएंगे. कोई कॉनकोर से स्पेसिफिक ट्रीटमेंट नहीं है. दिस पॉलिसी इज अ जनरल पॉलिसी फॉर एवरी पार्टिसिपेंट इन द लॉजिस्टिक्स सेक्टर. किसी भी स्पेसिफिक किसी कंपनी के लिए नहीं है.
Okay, because this was the view that couple of brokerages had. We had 3 or 4 positive views, but there were a couple of negative views as well. One was from Kotak and one was from Goldman Sachs. But let's go across to Mangalam for an overall analysis of this news and what it means for the stock. Mangalam?
Well, what everyone is pinning their hopes on with regards to Container Corp after the policy has been clarified by the ministry is the fact that now this paves the way for divestment, and that is the big event that everyone's positioning themselves for. How much does that benefit CONCOR by? Right now, brokerages are reluctant to put pen to paper to that one because there is not enough clarity on what the eventual land license fee would be. Will it be 6%? Would it be 3%? Would it be 1.5%? Or what the final number would be after competitive bidding? And that could be one of the big risks as well. But by and large, the fact that now the decks are cleared for privatization and that there is clarity on land license fee for 35 years, the belief is that there could be some more players who would be attracted. And that's why, you have brokerages like Credit Suisse who have a positive rating on the stock with a 700 rupee target price. At the same time, we do have brokerages coming in, brokerage notes coming in from the likes of Jefferies as well as Nomura. Nomura has actually upgraded the stock without actually changing any of their estimates basis this news that has come by. But on the other hand, like you pointed out, Kotak has downgraded the stock, and that's for one reason. Kotak in the long term believed that maybe the land license fee, the policy that would come, would have a fee of just 3% as against the 6% that the company is paying right now. The ministry has slashed that to 1.5%, but that's only prospectively via competitive bidding. So, currently it is still 6%, which is 3% above what Kotak's expectations are, and they had a fair value target of 730 odd rupees. Now, if this changes, then they believe that the fair value can actually go all the way down to 690 odd rupees. So this they believe could be one of the bigger risks. While they are positive about privatization, they again say that this is an event that we cannot really put pen to paper on in our valuation models, and which is why they've reduced the stock. So directionally it is a positive, but the nitty-gritties are still awaited by the street.
All right, Mangalam, thanks a lot for that. So directionally positive. The LLF, difficult to quantify the benefit out there. But what's going to happen is the divestment gets, a bit of a tailwind. I mean, it moves in the right direction. And brokerages like Nomura, well, they are factoring in some synergy benefits. That's why they have another 140, 150 rupees order they are adding on. Deven, any view on this one, CONCOR?
So on one side, I think the clarity of 35 years, I think is very, very important. And I think that has come. On the other side, I think the competitive bidding process would be allowed. So which means that I think the base of 1.5% could also increase. And probably I think if it is not 6%, below 6%. The one particular factor I think which is still not very clear to me in this entire commentary is the kind of existing contracts that the company has. Would these existing contracts also would go for the fresh bidding? In that kind of a situation, the current revenue position that has been built into, I think would probably get at least temporarily affected. I think that is what my take would be. But of course, I think this is subject to a lot of clarification that I may ask, I think, at the same time from the company. Even given that kind of uncertainty, possibility of, I think, some overhang would continue here. But at the same time, I think for the prospective customers, I think for acquiring the land for the cargo depots, I would think, I think for them, the clarity would be, I think, significantly more important, particularly the longer tenure of lease available to them.
Okay, yes, that's on CONCOR. Well, the other space which has done well today is some of these, oil marketing companies, IOC, HPCL, BPCL, playing perhaps a bit of a catch-up. So that's another space doing well. And any quick view here, Deven, on the oil marketing companies?
Honestly, Anuj, I think can't take a view on a day-to-day basis on this, particularly because if the crude oil prices have come down, I think will it sustain at this level? It will go down further. I think very difficult to say. And whether it would result into, I think, better margins, better, I think, the situation as far as the P&L part of the company is concerned, can't say much on this particular aspect. As such, the situation remains quite fluid as far as the crude oil price behavior is concerned. And I think nobody can say with confidence that what will be the price tomorrow. So given that situation, I think wouldn't like to take any call on this kind of news at this point of time.
Okay, all right. Well, the markets were moving towards the high point of the day yet again. Good move is what we're seeing. Banking stocks are powering ahead. Adani Ports is another one that's moving higher. And L&T, just pull up the intraday chart out there. That's a larger weight on the index. That as well is moving up. HDFC Life as well has been a relative underperformer, but that seems to be popping back up in the last few minutes or so. We'll slip into a short break. On the other side, we'll focus on IT bellwether. Infosys is in focus. The buyback cool-off period ends today. Does that mean another buyback announcement is in its offing? Well, we'll get you details on the other side. And then we'll be joined by Trideep Bhattacharya of Edelweiss AMC. He'll be joining in to take the discussion forward on markets and the road ahead. Well, while the headline index is looking pretty good and the banking names are taking your attention, well, keep an eye out on a couple of stocks in the broader markets. Pfizer has suddenly seen a sharp downtick, so pull up the intraday chart out there. It's moved to the low point of the day. And IGL is another one that slipped a little bit. Just take a look. That sharp downtick is what you're seeing on Pfizer, IGL, and maybe European, even PI Industries. Remember, that's been a big wealth creator over the last few years, but unfortunately, that's moved to the low point of the day as we speak. Let's focus on big boy though. Infosys buyback, that could be in focus because that 1 year cool-off period has ended today. Rima is standing by at the big wall with all of those details. Rima?
Thanks so much for that. So as you pointed out, the buyback period for Infosys cool-off has ended, which basically means that there has to be a 1 year gap between when the buyback
ends and the next buyback can be announced. Now that that buyback cool-off period has ended, it means Infosys is eligible for a buyback. So the question is, should we expect an announcement immediately? The answer is no. Now, in the last buyback, the gap between the cool-off period ending and the company announcing a buyback was a good 7.5 months. And the one prior to that, it was just about a matter of 2 to 3 weeks. It's possible that the 2021 buyback was a bit delayed due to COVID. The company was considering, saving up a bit on the cash. But the earliest we could expect an announcement is perhaps with its Q3 numbers. That's the 12th of October, because typically Infosys announces its buybacks along with numbers. Now let's understand what the past buybacks of Infosys portray as a 10. For starters, it will be the company's 4th buyback. And the details in terms of the size are up for you on your screen. The 2021 buyback was 9,200 crore. The one before that was 8,260 crore. And the one before that was about 13,000 crore. The last 2 buybacks were open market buybacks, not a tender buyback. And the maximum premium at which the buyback was done, the price at which the company was willing to buy back shares, was close to about 25% in the previous buyback. So in terms of a precedent, what is it that we can expect? Perhaps an open market buyback and no promoter participation. Now let's move on in terms of what Infosys' stated capital allocation policy is. It is to return 85% of its free cash flow over a 5-year period between FY20 to FY24 through a combination of dividends and buyback. And so far, the company has returned 73% of its free cash flow for FY20, 21 and 22 combined. The quantum of dividend being doled out by the company has also started going up. And last year, the company doled out or paid close to about 31 rupees in dividend. So now it's all eyes on this cash-rich tech major on when it plans to make a buyback announcement and what the contours of that could be. Back to you.
Okay, Rima, thanks a lot for that. That's always something which the market watches out for or wants from Infosys, right, Devin? But your view on the stock, Infosys, of course, it's corrected quite a bit from its highs, but has been protecting its recent lows as well.
Anuj, I think as I made a point earlier, I think this particular company looks, I think, pretty interesting because I think the visibility of revenue and the profit is there in the business. And because of that, I think if you have 5 years, 7 years worth of, I think, contracts which are getting executed, and if you are successfully winning some of the contracts, I think every quarterly basis, that means I think one should not be having any doubt in mind about, I think, the ability of the company to execute those particular projects going forward. And that creates a good amount of visibility. Given that kind of a situation and given the cash in the balance sheet the company is having, I would be very surprised that I think they enter into a buyback kind of an arrangement. Also to, I think, protect the stock price from going down and send the positive signal to investors. So I would remain reasonably more confident on the fundamental side of the prospects of the business per se, as far as I think a company like Infosys and TCS is concerned.
Okay, all right. Well, some of these OMCs are actually bucking the trend now as we speak. BPCL has moved to the high point of the day. Keep an eye on that one. IOC as well is moving higher. Cooling off of crude oil prices, those inventory losses could move out. So I guess that's the hope out there. Both those two stocks. Pull up IOC as well. He's doing pretty well. Well, Devin, final question from me before we let you go. The ferrous and non-ferrous space. On one hand, everyone's talking about supplies shutting down. But China is the problem. China's consuming less. If that happens, they'll be fueling the global markets with higher amount of what they produce. And that's what could put pressure on pricing. So demand seems to be the focus as of now, which is weak, not the supply constraints. How do you approach some of these stocks? Both Hindalco and Tata Steel are the top losers.
So, Nigel, I think my understanding says that I think domestic market per se, the prices are also comparatively softer compared to the international market price. So should the situation of, I think, softening of prices happens because of, I think, the China factor in the global market, I think there might be some correction in the price, but I think on the other side, the demand scenario is expected to remain extremely strong. Rest of the places in the world, I think the situation is, I think the demand scenario is getting affected, but out here in India, the demand for the domestic producer, I think is likely to remain very strong because of the higher amount of infrastructure spend and the industry, I think, to the capex mode. All in all put together, my reading says that I think overall, I think they will be able to meet the pricing pressure at the same time because of, I think, the input costs now not rising alarmingly as it used to be, I think, a few quarters back. So from that point of view, I would think that I think even though they may not earn the supernatural profit margins, but they would be in a much better position to I think pass on the cost and I think enjoy the delta as far as I think the prices are concerned. So not too negative, but yes, I think if the corrective prices comes in, then only I think the buying should take place into the metal commodity stocks.
Okay, Devin, we will let you go on that note today. Thanks a lot for joining us. Always good talking to you. The Nifty, by the way, is making yet another move, 17,793. In fact, the last few minutes of trade, the Nifty has actually managed to play a bit of a catch-up compared to the Bank Nifty. The Bank Nifty has been strong through the day, of course. Larsen & Toubro, I think, is the reason for that. Just pull out the chart of Larsen & Toubro. That stock is contributing quite a bit in the last few minutes. And of course, along with that, Lever and Reliance also doing well. Tridip Bhattacharya is CIO Equities at Edelweiss Mutual Fund. He is now joining us. Tridip, hi, good afternoon. What a strong market. What is this market sensing? I mean, that's just ignoring the global risk off. And it's not just that, you know, we are falling less than global. I mean, we're not even falling, we're rising and at a very fast pace.
Absolutely. I think in the very near term, the market is probably rejoicing the fact that the oil has corrected a good bit in the last few sessions. But I think more generally, if you look at over the last three odd months, you know, we are sitting on a 15% plus rally on the back of a weak global backdrop. So I think there is, in general, appreciation of the fact that the local micro is looking a lot better than the global macro, and relative to the other regional peers, the buy the cheap market hasn't really worked. It's basically wherever the earnings have been more resilient is where the markets are more resilient that way. So I think, you know, yes, I agree with you that in some of the pockets, while global weakness is not being fully appreciated, the local, the domestic cyclicals part of the Indian economy, which is the dominant part, is doing well, and in my opinion, will continue to do well on a relative basis for sure.
Right. Hi, Tridip. You know, the domestic economy seems to be recovering. And in fact, the banking names are doing very, very well. I'm just going through your portfolio construct. You have it, you have a mix of both. The larger names, you know, like the ICICI banks, HDFCs of the world, and also smaller names, whether it's a federal bank, which in fact has been in focus. Do you think there is a wave of consolidation that could take place, you know, in the banking space? As it is, credit growth is good, burst of asset quality seems to be behind. But wanted your comment on this.
So I think we are in probably the early stages of a capex cycle where the capex related lending is probably yet to come in. I think when that comes in, probably kind of it'll in all earnest, it'll probably be next fiscal year. But as it starts to show, you will really see some of these banking share prices kind of, you know, do well, in my opinion, as compared to what they should. At the moment, they are the only place in the market where you see absolute value as well. So clearly, we are meaningfully overweight, you know, the lending financials, particularly as part of the market, and we expect it to do well. With regards to consolidation, my sense is that at the moment, the lot of consolidation has already happened. From here on, you might see a little bit more of broad-based growth, more broad-based credit growth from where it is over the next 1 to 2 years. And whether it is larger banks or the smaller banks, all of them will see some bit of this demand flow through them. We hope to own, obviously, the best of them, which is what you said is there and thereabouts in the portfolio.
Okay, the Nifty is now trading above 17,800. Why that is important is because 17,800 remains the area where you have the highest calls. Remember, the last stop for the market was 17,800, and today, despite the market's rally, 17,800 call premium is actually down even now, and that's because, you know, this amount of open interest over there is 1.32 crore shares. That's just massive. 16 rupees premium right now, 14 rupees. I mean, I don't know if that will be taken out. Maybe, you never know, but for now 17,800 is almost here on the Nifty. So Tridip, in the broader market, what are the themes that you are backing now, and the kind of money that you get, what kind of stocks are you adding?
So basically, we think in the near term, the market is more a relative value market, but we are constructive on equity markets from a 2 to 3 year perspective. And the areas that we are bullish on are, number one, we are biased for a rebound in credit growth, which is what I talked about. And this would be driven by a private sector investment demand. So we are overweight industrials, capital goods in a meaningful way in our portfolio. We are also overweight direct and indirect plays on household capex, which is the real estate part. We think that we are somewhere in the first 2 to 3 years of a 7-year real estate cycle, and they should stand to benefit. And off late, we have turned a little more positive on consumer companies, where we think there is pricing power coming through. Because as we go through the back half of the year, we think that some of this commodity inflation, as it cools away, might mean a bit of tailwind for these companies, as opposed to headwinds that they have been facing for the last 6-9 months.
Trideep, what about the pharma space? No one's talking about it. It doesn't seem to be a hot sector any longer. In your portfolio, you have a few of them. You have Sun Pharma, I think, Gland Pharma, there's JB Chemicals as well, among the few names that I could spot. Your view on the space out here, and how would you approach it? The worst of pricing in the United States, is it behind? Give us your sense.
My sense is that broadly pharma is stocks exposed to the US and domestic. And within that, the US exposed pharma players have not really seen the bottom. In other words, aligning with the US weakness, there might be some more weakness in the prices in US exposed stocks overall from a pharma perspective. From a domestic pharma names point of view, we are selectively positive on some names, and that's what we are overweight on. On net balance, we'll probably be neutralish on the sector, with more oriented towards domestic rather than the US plays, is what I would point to you at the moment.
Okay, that's on pharma. What about mid-cap IT, Trideep? That is an area where the market's now a bit concerned about whether, there will be a lot of margin pressure from this quarter on, and whether there will be more valuation reset.
Great question. I would actually be less worried on margins. I would be more worried on what they say on the top line, if you really ask me. I think the margin worry has well played out and well understood over the last 2 or 3 quarters that what we have seen. I think the street in general is waiting to hear that what happens to Indian companies' revenue growth for this year or maybe further out, as some of the US companies have started profit warning over the last month or so. And in that context, Accenture results would probably be a bellwether for, in general, for the sector, particularly in mid-cap IT, because mid-cap IT used to be the place which used to give the growth proxy in the context of the IT services per se. So on net balance, we are actually not so positive on mid-cap IT as yet, even though the stocks have corrected, because we think that the revenue weakness is yet to be fully priced in with regards to expectations in general.
Okay, all right. Trideep, what about the cement space? That's, I don't know, these stocks are just moving in one direction. The recovery I get, the larger names will do pretty well. The problem is that, some of these smaller names, the mid-cap companies, they may not ultimately get acquired, which in that case, it could be putting investors in a bit of a spot. How do you approach this thing?
Absolutely, well spotted. I would say that we are selective in this. So we are, as you said, that we are overweight on some of the larger names which would benefit, even though there is a new entrant in the sector who might, just to make his presence felt, get a little aggressive this way, that way. And if it were to happen, then clearly the smaller names might be in a spot of bother. Hence, we prefer at the moment the larger pan-India plays and relative pockets wherever we see less capacity and more pricing discipline coming through. So we are approaching this with a bit of selectivity in our mind, and we think that we will continue to remain that way. It's unlikely to change, given that the sectoral dynamics from new player entry and how that will behave is not yet clear. Clearly, the stocks have not done well, and hence a little bit of euphoria, some good news makes the stock buoyant from a very near-term standpoint. But I think over a period of time, at some levels, again, the sector-related worries like the new entrant and what they will do to the pricing discipline will emanate. And hence, we are selective in this space.
Okay, selective in the space. Trideep, so to your mind now, what is the big risk to this market? Do you think this market could just make new all-time highs pretty soon and make much higher highs, or is this a market where you would be a bit cautious now on margin?
I would say that the risk to the margin lies actually from a negative headline outside of India. So any tension potentially on China, Taiwan, could potentially be something that the market is yet to factor it in. Likewise, a bigger sort of rate hike than anticipated in the United States could also spell a bit of a correction. But I would say that those kind of fears are there or thereabout. China, Taiwan could be an incremental place to be worried about. I think as we go towards the end of the year, the festive demand and the fact that this will be the first year where there is no COVID, or people are out in the open to the extent that they can, will lead to certain resilience in certain pockets of the economy, and hence the domestic bottom-up data would be positive. The worry could be that if the gas prices, or for that matter, any tensions on the geopolitics side, keeps us down. So, given basically strong bottom-up and weak macro, that is where I think a bit of complacency might step in. But I would use that weakness to get in. I think from the next 3 to 5 year perspective, you will see the India domestic story, India economic recovery story, and Indian market story being particularly strong. Wouldn't bet against that.
Okay, Trideep, always good hearing your thoughts. Thanks so much for stopping by and filling us in with your views on a whole host of sectors that we just discussed. Wishing you a good evening ahead. By the way, keep an eye out on the markets. We're moving towards that 17,805 odd and seeing a bit of a pullback. The sense is something's got to give out here. If we get back to around that 17,820, maybe we're in for a bit of a bounce, a further bounce from there on. For the time being, the bears seem to be protecting that level. And from the broader markets as well, a couple of stocks, they're calling for attention actually, particularly in the last few minutes. CONCOR, it seems the street is saying, yes, this is a positive, but in the longer term. In the near term, it seems there is some bit of uncertainty. So that stock has come off the high point of the day. In fact, it's on the verge of moving into the red. We'll slip into a short break. And as always, we'll get you a couple of technical calls on the other side.
Welcome back. Well, would today be the day when the Nifty finally closes above 17,800. Let's just look at the chart of the Nifty and see where it is right now. I mean, if you see the recent chart of the Nifty and the kind of highs it's been making, of course, in August it had made a high of 17,900 as well on closing basis, and after that the last close was 17,759. So today we are making a bit of a higher close if we indeed close above 17,800. Mitesh is of course back with us for BTST calls. Mitesh, would you want to keep your index longs intact, and what would be your BTST calls?
Yes, Anuj, I think, but the bank Nifty is where we have more positions. I think very clearly that's the index which is slightly doing that better than the Nifty. But yeah, I think broadly maintain longs, and I have in fact 2 BTST calls, 2 buy side recommendations. The first one is Ultratech Cement. Disclaimer, we have some positions here as well. Some BTST with the stop below 6,900 for targets of 6,965. And Tech Mahindra is the other one, which is closing towards the day's high. That's a BTST with the stop below 1,080 for targets of 1110.
Okay, all right. Thanks a lot for that, Mitesh. Let's move on then. Months after stepping down from the board, declaring that he will be paring down a stake in the airline, Indigo co-founder and former director Rakesh Gangwal and family have sold a small 2.8% stake in the airline. Sonia is here to tell us more on that. Sonia?
Well, thanks a lot for that. So 7 months after stepping down from the Indigo Aviation board and stating that he would sell his entire holding over a period of 5 years, the co-founder of Interglobe Aviation, Rakesh Gangwal, and his family have now started the process of selling their stake in Indigo. The Gangwal family today sold 2.8% stake in Indigo for 2,000 crores. Remember, the co-founder Rakesh Gangwal and his wife Shobha Gangwal together own 23% stake in Indigo as on June 2022. Now, the Gangwal family trust and cumulatively owns about 36.6% stake in Interglobe Aviation. And Rakesh Gangwal had indicated that he would sell his entire holding over a period of 5 years. Now, the stake sale today was possible after the modification in the Articles of Association, which allowed the sale of shares by promoters without seeking the approval from the other. But what this does is puts to end years of dispute between the promoters. Post the stake sale, Gangwal's holding will be down to about 33.8%, while Rahul Bhatia, who's the other co-founder, will continue to hold 37.8% of the airline.
All right. Thanks a lot for that, Sonia. Well, let's get in our market expert, Amrish Baliga, who joins in. Hi, Amrish. Amrish, you heard what Sonia has to say. Now, one of those promoters that have more than 35% out there, they're coming and selling a little bit. The good news is that there will be a cool-off period, so they can't sell maybe for the next 150 days or so. But clearly, this will be a bit of an overhang. On the flip side, there's a big rebound. After a couple of years of being locked down, there's an unlock theme that's playing out. Crude prices are falling, so ATF prices as well will fall. How do you approach the stock at around this 1900 rupees odd?
This overhang is going to be there for a long time, no doubt. But at the same time, we should remember that they would be selling smaller lots, not 5% or 10%. They'll be selling possibly 2 to 3% each time. But yes, overhang will be there for a while. But what we should also remember here is that the competition is hotting up. Akasa, I think, will in fact increase its fleet. I think competition will come from there. Jet is coming back. Air India is getting back on track. So competition is going to be there much more. So I think it's good time for passengers and not for the airlines as such. So I still see that there would be pressure on the margins going ahead. And I think we should also see, I think we should also wait and watch as to where this money goes. The shares which is sold, will it finally, possibly go into either airline? Is Akasa going to be the airline? I don't know.
Okay, fair enough. Just looking at the market, it's really strong. Though you could argue today the broader market has not performed as much, but then, the broader market has been outperforming for so long. Let's just pull out the intraday chart of ICICI Lombard Life Insurance, General Insurance once again. ICICI Lombard, of course, is the one which I'm talking about now. Maybe the block deal buzz is back. It has to happen. The Bharti has to sell stake. It's just that we don't know at what time it will happen. Amrish, good afternoon. Any views here on ICICI Lombard?
In fact, ICICI Lombard, I had given a buy call, I think a couple of weeks back on the channel. In fact, I have a price target of about 1500 odd. Basically because, post-COVID, what we are seeing is that the claims are coming down. At the same time, we have also seen that the insurance premiums have gone up. So overall, I think the margins should go up for general insurance overall. And in that, ICICI Lombard being one of the leaders, I think will clearly benefit. So, I would clearly buy it at any sort of depths.
All right. Amrish, before we discuss a few other stocks, I believe you normally have a stock that you want to discuss with us. This time around,
absolutely,
you're looking at a hospital company from the Nifty, Apollo.
Apollo Hospitals. In fact, I have been recommending this, I think, for the last 2 to 3 years. In fact, I had also recommended at about 1400 levels. All the targets have been met. And now I'm giving a fresh buy call. Basically, Apollo Hospitals has about 71 hospitals with a total bed capacity of 9,900 odd beds and about 4,700 odd pharmacies. It has a occupancy of about 60% and nearly 70% of the beds are in mature hospitals, which means that the EBITDA margins are decently high for those beds, is about 23%. And in fact, we'll see more hospitals maturing over the next couple of quarters, so blended margins should improve going ahead. And what we have seen post-COVID is elective surgeries and medical tourism is back in vogue, so occupancy should also increase. We have seen occupancies at about 68-69%. Currently it's 60, so I think there's a decent headroom available for that also. And lately, in the last 2-3 years, we have seen that Apollo is concentrating on an omni-channel digital health platform, and it's on track to becoming the second largest digital player in that space in India. And if you look at the pharmacy business, that's contributing about 37% of the revenue. And in that, private labels is about 11%, which is extremely good because from a margin perspective. I'm looking at revenues for the hospital growing at about 16% CAGR for the next 3 years. And we've seen the net debt also coming out to about 1,100 crores. So with the EPS expectation of 91 for FY24, I'm expecting a target price of about 54.60. which is about 25% higher than where we are.
Okay, Amrish, what about stocks like Shree Cement? It was thrown out of the Nifty or being thrown out of the Nifty, but perhaps it was the best news. Stocks up 10% in 2 days.
That's true, and if you look at cement stocks across, in the last couple of days, we have seen an extremely good move. I mean, look at the way JK Lakshmi has moved up. I think it's moved up about 60-70 rupees in the last 2 days. I think overall cement pack I think is again. I mean, we are seeing a lot of interest back basically because we are seeing that the input cost should be coming down. Because of the commodity correction, especially the oil prices correcting, I think, and at the same time, we are also looking at the demand, which is still decently robust, and not too much of capacity is going to come in, at least in the foreseeable 4 to 6 quarters. So I think all this is extremely positive for the cement space. So I think one should remain invested.
All right. What about have you gone and watched a movie of late, Amrish? PVR, the stock saw a bit of a correction because quite a few, movies that released, they bombed, so to call it. But now it seems tomorrow, Brahmastra, the opening could be good. We have to see what happens from there. How do you approach the stock? I think the stock has moved into the green as we speak. So I just wanted your view out there.
No, but then what we have noticed is, if you have 5 movies, releasing 3 of them bomb, possibly one or two of them do decently well. So, on those expectations, the stock possibly has moved up, but then I think it would be only a short-term issue because I think OTT clearly is there to stay. And what we are seeing is Bollywood possibly is getting its act wrong. In the last couple of months, we've seen that. So I suppose this may not be the right time to get in. I think more or less we have seen the peak for these exhibitors. So at these levels, I'm finding it expensive.
Okay, Amrish, stay on. We'll take a break and come back and, of course, address the market closing as well.
Well, 17,800 odd. We kissed that mark, but at high level, it appears there is some profit taking. Hindalco is getting a bit of a knock. There was a Jefferies note earlier today, and they mentioned that the stock valuation-wise, it's still not as cheap as it should be. It's trading at around 1 times price to book. In the past, you've seen it trading at much lower levels. They've also highlighted the fact that the can market in North America could be slowing down, and it won't grow as much as earlier anticipated because a couple of clients out there are pulling back. And the third factor is they're seeing in the domestic business, yes, they're doing $1,200-$1,300 per ton in terms of aluminium EBITDA per ton, but that could scale down to around $800 per ton. So Jefferies note, they had mentioned all of that earlier today. The stock is now down close to around 3% as we speak. Tata Motors as well, a bit of a leg down out there, so that as well. And Maruti actually has moved to the day's low. Pull up the intraday chart out there. That one as well has pulled back a little bit. Well, let's get some market opinion going. Earlier today, we caught up with Pramod Gubi of Marcellus Investment Management, and he says that India has good visibility for the next decade, which bodes well for various sectors. Let's listen in.
I think whether a broader slowdown in the world will affect India, of course it will. We are living in a globalized world, increasingly so. So we will certainly get affected, particularly, say, export-oriented sectors. Will face that demand if interest rates go up, capital flows and cost of capital will also take a hit. But having said that, amongst all other emerging markets, relatively speaking, I think we do stand out because, fortunately or unfortunately, we don't have a thriving export sector compared to some of our other emerging market peers. I think we have made enough changes as far as reforms are concerned, as far as infrastructure is concerned, as far as our financial markets are concerned, to chart our own course for the next decade or so. I think financials, like I said, is a big theme, given that it plays into rising inflation and as a result, rising interest rates. And if we do believe that we are due for a capex cycle in the country, credit growth should also pick up. We're already seeing numbers that we haven't seen for a long time, 14% non-food credit growth in the banking system. I'm not sure how many of us remember seeing that sort of number. So we're clearly seeing a benefit both in terms of loan growth as well as margin expansion for banks, and better funded NBFCs. Well, autos are bound for a recovery for some time now. We've had a couple of supply side challenges. We anyways entered COVID with a weak background as far as demand was concerned, and COVID put a further challenge on the supply side. Even now, I don't think the entire semiconductor shortage issue is gone, but at least it has abated somewhat. So we should see a decent cycle, at least for the next 2 to 3 years, as far as demand for autos is concerned. Within that, I think if you believe that there's an underlying economic recovery which will drive industrial recovery, commercial vehicles should definitely do well on that front. And we do own companies like Alkyl Amines, Fine Organics, both are stocks that we own across all our portfolios for our clients as well as ourselves. We continue to work bottom up in terms of identifying companies and businesses which have immense amount of pricing power, which will protect them in high inflationary periods.
Okay, that's some view that we got from Pramod Gubbi. The market, by the way, is ending not quite at the highest point of the day, but very close to that, at least on the Nifty and the Bank Nifty. In the broader market, of course, today there was some profit taking for sure, but nonetheless, it still classifies as a bit of a breakout if we close here, because the market's been struggling to get to 17,800 and close above that. Technically, still closing below that, maybe even post-averaging. But Mitesh, what are the next levels to watch on the Nifty? Because 17,800 in the past has proven to be a bit of a tough cookie to crack.
Yeah, Anuj, I think 17,800 this time looks like a little bit clear. I think this optimism, which I have, stems more from the fact that the Bank Nifty is on the verge of breaking out, and I think that should pull the Nifty also and see it sail past the 17,800 level. I think once this is cleared for the Nifty, the bigger level will come closer to about 17,950, 18,000 levels, which is where we had peaked out in the third week of August. I think that high should be reasonable.
Okay. Amrish, one stock which has been making a bit of a comeback quietly is BHEL. Any views here?
BHEL, in fact, although the earnings haven't been too great because of which it was under pressure, but then the sort of order flows which you're seeing for BHEL, I think should stay in good stead for the stock, at least in the foreseeable 3 to 4 quarters. In fact, I'll not be surprised if we again see those levels of 78.80, which we had touched last year. So I think even at these levels, one could look at buying it.
Okay, all right. Amrish, final question before we let you go. Stocks like Suzlon, suddenly they come back on the list. Dish TV, suddenly people are talking about that. In fact, Yes Bank as well, the stock has been moving up. There is some buzz that maybe there's some fundraising plan out there. Any view on any of these three names? I ask you because at one point in time, people are thrown in the towel. They said, no, this is done and dusted. But suddenly there is some kind of interest that's coming in there. So I wanted your view, if you have a fundamental view on any of these three.
Fundamental view, I only have on Yes Bank. I think they've clearly got the act in place. It's taken a while, and the stock, in fact, consolidated very well between those levels of 12 to 14, 14.5, and now it has broken out. We have seen credit growth happening. The earnings have been good. If you see the last 2-3 quarters, steadily improving. So I think Yes Bank is clearly on the way up. I don't think we'll again see those levels of 13, 14 anytime soon. I think we should see levels of about 22 to 25 over the next possibly a quarter or two. So Yes Bank, clearly I'm positive. Suzlon, I think it was thanks to that typo error. I don't know whether it was a real mistake or not, but then yes, it really helped the rumor mills, which helped the stock move up to about 11.5, and now it's corrected. But then I think people should utilize this up move to at least book out to a certain extent. And Dish TV, I really don't have much of it. I don't track that stock very closely.
Okay, Amrish, we'll let you go on that note today. Thanks a lot for joining us. Let's start wrapping up the market action for the day then. It was a very strong day. The bulls in control. The Nifty is closing. The provisional closing is above 17,800. The final closing will be slightly below that. But at least that it's here on the Nifty. The Bank Nifty gained about 780 points or thereabout. So looked quite good over there. In terms of individual names, well, on the financials did well. ICICI, SBI, Axis, Cement, another strong day. Shree Cement and Ultratech both higher. Mahindra did well. Bharti Airtel was up 2%. Kotak, HDFC Life, Wipro. In fact, today even IT participated. ITC was up, fresh 52-week high on ITC in today's trade, so that looked good. Hindalco and Tata Steel were two stocks where you saw some decline today, so these stocks sort of underperformed. But all in all, a very strong day for the market, Nigel.
Well, from the broader markets, actually, there was a relative underperformer. We've seen a couple of days of outperformance coming from the mid-cap index. Today, it ended high with a gain of only around 0.2%, while the Nifty and the Nifty Bank were absolutely rocking. The mid-cap space, there were quite a few winners, though. You had Schneider Electric, the stock moved up on large volumes, though it ended off the high point of the day, up close to around 10%. A couple of other names, Motherson Wiring, well, that stock was up close to around 6.5% in today's trading session. And Zomato as well had a fairly good day. You know, it came off the high point of the day, but it was still up close to around 3% odd by the time we wound up. On the flip side, a couple of these names that we just were talking about, Dish TV, it pulled back close to around 6%. Suzlon as well, after going to around 11 rupees odd, it's corrected close to, 7-8% from there, so to call it. So that did pull back a little bit. HCC as well has seen a good run from the recent lows, but that one as well was under some pressure. And a couple of these sugar names, like Sri Renuka, well, both of them, that stock in fact was down in today's trading session. To pull up a few more gainers then in trade today, you had Terra Software, the stock was flying away. You had Arvind Smart Spaces, the stock was locked in upper circuit with a gain of close to around 20%. Bajaj Holdings as well was up close to around 13%. We don't talk about that very, very often, but that holding company as well did do pretty well in today's trading session. So to wind things down now, we played out expiry today. It's the weekly expiry. The Nifty ending high with a gain of close to around 170 points. The Nifty Bank, well, that was the one that was on fire, up close to around 800 points odd. Mid-cap index eked out some gains. The good news, though, is that the number of stocks that were advancing way more than the number of stocks that were declining. We'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our Thursday special, Big Deal, comes up next.